Monday. Welcome to MyStockScanner Live, powered by the 3-Point Playbook. We are proving that investing doesn't have to be stressful. We keep it simple. 3 questions for every stock. Is it a quality company? Does it have an upside? And is now the right time to buy? Clear answers, confident choices, and peaceful nights. That's what we're trying to give you guys. I am the guy who get to ask the questions, and sometimes on behalf of you, if you have written us some questions, that's at FOMO@MyStockScanner.com. The answers are supplied by Hans-Henrik Nielsen and Liam Flavel. Are you guys ready for another week?
Definitely.
Yeah, absolutely. It'll be an interesting one.
It's going to be an interesting one. It's one of the big weeks in the year. And you guys, I can see that, can smile. And you can do it all the way to the bank. And you could do it to the tune of 31.6, which is the year-to-date number for the 3-Point Playbook portfolio. And compared to, for example, the US major index, S&P 500, which sits at, 15.47, not too shabby, Liam.
It's not too shabby, but actually it really depends on how you look at it, because you can see the benchmark figure that we've got is 4.71. That is because we take into account currencies. There is other currencies than the US dollar out there, I believe. I think we have sterling still, and you guys have some sort of weird currency. But yeah, so the US dollar took a hell of a dive this year because of the Trump policies, and there are good reasons for that. What that's meant is that if you were actually holding US dollar stocks out there, then those would have dived as well. So our mixture of European portfolio stocks and also the US dollar side of things has actually given us a much, much better return than the benchmark.
So the benchmark of 15.47 is if you sit in the US, not necessarily here in Europe.
No, exactly. So we, for exactly that reason, one of the things we always teach people is about diversification, and that's what's held our portfolio up this year, is actually being in so many different types of stocks, so many different countries, that we're diversified geographically as well as just across different sectors and industries there. You can see at the moment, that blue sort of line in the graph there that we've got, the blue area chart, is way above the S&P 500, which is a great sort of result for us. You can also see we're down to, I think it's just under 50% in stocks right now. So we're holding quite a lot of cash ready for any particular downturn that we might see. And in the middle of the earnings season, that could be a good thing. You never know.
We shall see. One thing for sure is you have the powder ready if there's a need to fire. On the show today, we are going to talk more about the 3-Point Playbook portfolio, because we sold some stocks this week and bought a couple as well. We're going to talk about a major bank merger in Denmark. There's talks between China and the US, and there's danger for the big supermarkets in the US as well. Walmart, Costco, and others might be hurt by the shutdown. How that all goes together, we will tell you. Defense stocks are in focus again, amongst others, because Norwegian Kongsberg is coming with numbers. Danish Netcompany also on the deck this week with earnings, and in the US, the biggest week of the earnings season. I can say that with no shiver in my voice. We get numbers from Microsoft, Google, Meta, Apple, and Amazon. And then I have a number of today to top it all up with, 255 million, and that's people. What it means, I'll get back to in a second. But let's start with news of the day, Hans-Henrik. Sydbank, eller Sydbank, if we want to talk Danish, yes. Arbejdernes Landsbank, and Vestjyske Bank. Mergers.
Yeah,
surprise for you?
I didn't see that coming. There were some rumors about some consolidation in the banking sector in Denmark, and I would say that is due. There are a lot of very small banks, and as far as I could see, with Sydbank, Arbejdernes, Landsbank, and Vestjysk, is that the fifth largest bank now? That is very interesting.
And Sydbank's stocks are going up by the tune of, I'm looking up right now, 5%. Good day for them, indeed, to those who hold the Sydbank stocks. Good day.
Yeah.
Later this week, we're going to get earnings from another big bank. Jyske Bank is coming with earnings on Wednesday, I think it is. But lots of other banks are going to give us numbers as well. We're going to get from Spar Nord, Skjern and Nordfyn. So lots and lots of banks going on. But also companies are coming with earnings. And one that we had our mind set on I think we talked about them last week, was Netcompany. Hans-henrik. Earnings on Thursday from Netcompany, we almost threw out a net for them right there, but we're not buying into earnings. That's a rule.
That's true. We did a little piece on it, I think it was a week or two ago, because we had a lot of questions about it. And just to summarize that very quickly on our playbook here, we do like to see as much green as possible. And this is just a good quality stock. There's no doubt about it. Some very interesting products in the pipeline, good quality score of 82, earnings per share and revenue going up, cash flow going up. It's a rock solid company, definitely. When we're looking at the value chart, which we often do, there's a very good case here. I know the analysts are only believing in around 11%, but when we're looking at this mix between price earning and earnings per share, that is where we're looking, trying to look into the future in our little crystal ball here. Not to predict where the price should go, but to see if there is a good solid upside. And we must say that our bull case here is almost 110%. Our bear case is only minus 1% about. So we have no idea where it lands, but it shows there's a lot better upside than downside. As you said, we are not buying straight into earnings. And if we look at it here, we can see that earnings are coming up here. It isn't double green, as we call it, meaning that our indicator on daily and weekly are showing green. That tells us there's a good momentum. This is a fantastic setup, if you ask me. But we never buy straight into earnings, so let's see what happens after the earnings.
I can feel almost a disappointment in your voice.
Yeah, definitely.
I would smiling as well.
Yeah, had there been no earnings, I would have grabbed it today.
Yeah. Okay. We shall see, as I said, earnings this week, and it could be a grab straight after that. But there's always a little volatility coming into that. Lots of unknowns. And when we see the unknowns, we tend to sort of zoom out and go helicopter view and see it all from above. And Liam, if we take that look from above right now, yeah, these two guys are meeting up. No introduction needed, but just in case, if you're listening to the only sound version of this, the picture that's been showing on the screen is Xi and Trump. And there's a smile on the one guy, and the other one, I can't see if it's a frown or a smile. Liam, they say the framework looks pretty good for the negotiations between China and the US.
Yeah, I mean, I've said that, only about 15, 16 times this year so far. So we have heard this before. It does sound like they're inching forward. They've both got strangleholds over each other's economies, because China have the rare earth minerals that they're threatening, or actually are stopping distributing around the world to all countries at the moment, it seems. And the US have things like jet engines that their own homegrown, the Comac Chinese aircraft manufacturer actually desperately needs, and they can't do anything else without them. So there's a lot going on between these two. It took 2 years for very little to happen at the end of the day in the last trade war that they had in 2018 onwards. So we're in very early days on this so far. The one thing I would say that is totally disgusting is the Bloomberg headline was talking about these two consummating their TikTok marriage, which, I mean, I'm just going to share that vision with you in your head.
Yeah, thank you. I don't hope that people are eating as they're seeing this show, because that's not a pretty sight in your mind. But there's no doubt these two guys are more interested in solving this than they are keeping this war, because it's going to cost both of them. But let's just, for argument's sake, say, Hans, that we get to a point where they agree upon something and Trump gets to say there's a deal. What happens then?
Of course, that's a guess, but my best guess is that we have seen that before in trade wars, that the second they come to some sort of an agreement, and let's pretend it holds more than a week before one of them backs out, then we will see more container transport. We'll see marine shipping starting to go up in price. People can look all the stocks up, and we can touch on them later, but marine shipping, that would be my bet.
If I look to my screen right now and I look up towards the one corner here, I can see Maersk is up by 1.9%. Is this the sort of the fireworks going off too soon?
I don't know. People are always speculating, and as soon as some rumors come out, they start positioning themselves. It could easily be that they go up, and then it's a bit of a buy the rumor, sell the fact or the news. So I would not jump into something specific right now, but if it seems like they're actually doing some groundwork that seems to stick, then that would definitely be a place I would look to.
I'll then take a shot at Liam then and go, if I look towards futures for the US market, we have Dow Jones up by 0.6, we got S&P 500 0.9, NASDAQ 1.3, we got small cap at 1%. That sounds to me like fireworks are going on.
It does, doesn't it? And pretty much it's all powered by the US and China not having fisticuffs anymore and actually being best friends for the next 24 hours, 36 hours, something like that, until one of them say something a bit dodgy.
Okay, let me ruin the party then, because then, Hans-Henrik, let's take a look at internally in the US and for a minute kind of just go look at this shopping cart, because right now there's a lot of talk about going on about SNAP. They used to be called Foodstamps back in the day, but SNAP is apparently a little more sexy for the consumers over there. But there's a rumor that these companies that we're looking at, Walmart, Costco, and Kroger, and others, could be hurt by what's going on with the government shutdown. What's the story?
Yes. Let me see if I could share my screen here. There we go. What we need to realize, I wrote an article about this today. People can go in there and read it. But in the US, there are about 42 million people on food stamps, what is called SNAP today. That means that they're getting paid every week or every month with digital vouchers so they can go out and buy food. And first of all, 42 million people, that's about, 12-14% of the US population that can't afford food. We can see on the buy now, pay later, though, that people are 25% of these programs are used for basic groceries. So people don't have money for food. The second SNAP disappears, and you might ask yourself, why would it do that? It's because there's a government shutdown, and that means that they cannot fill up the money chests for these SNAP programs. That means next week, probably, maybe this week, there'll be no more money for SNAP, meaning there will be missing $2 billion every week in revenue for Walmart, Costco, Kroger, and all of these. I think that will be felt.
Yeah, but are you saying, and I know this is not advice, but are you looking for these companies to take a hit on the stock exchange due to those revenues disappearing?
Well, that is a bit harder because, for instance, there is this magic word that they can just throw around these days. They could just mention AI, and there's no better AI stock than Walmart, for instance. so the other day they went out and they threw this AI out in the air, and all of a sudden the stock jumped. However, if this continues, and we should be saying this is about 4% of their revenue on a week-to-week basis they will be losing, which is a lot. But if it's only a week or two, it will not be devastating. But if this goes on all the way through November, for instance, which it could, then we will see the Walmart and Kroger's and so suffer. We should not forget here that it is devastating for the people that all of a sudden have to skip meals. It's terrible, and it can seem it's a bit cynical that we are talking about stocks here, but that is what we do.
There's no doubt that it will have a major impact on a lot of people in the US, and that is one of the reasons why people might be starting taking bets on the shutdown will be over soon, because you don't want 42 million people being angry and hungry at the same time.
A lot of people thought that when it started. Our analysis was this will be a record shutdown. The record is 35 days. I absolutely see this going at least halfway through November, probably a bit longer.
We shall see. It is a very, very busy week. We mentioned already lots of big companies coming out with numbers, but it also goes for Europe and some of the companies that I know interest a lot of people that are watching our show and reading the articles that you guys put out. Kongsberg are coming with earnings on Thursday. It's not a company that we have in the 3-point playbook portfolio, Liam, but we do have other defense stocks in there. But if we take those two, is there a reason why we have Indra from Spain, and we don't have Kongsberg.
Oh, let me just share my screen very quickly, and we will just have a quick look at Indra initially. You can, there we are. So Indra, we'll go through the 3-point playbook very quickly. So Indra is a stock that we bought into. I mean, we had it in February, had a great run with it, with the huge increase that we saw in all the stocks. But we also picked it up again. It came up on our radar on the 25th of September, I seem to remember it was, roughly. And you can see here, again, a bit like the stocks we were talking about earlier on, it's a sea of green on the page here. You can see that the quality score is 93. The earnings per share are going up very nicely, and very green there. The PEG ratio, which is, tells us how much of the price increase that we're expecting is actually priced in right now. Anything below 2.5 is really good, and at 0.82, which is what Indra is at right now, means that there's plenty of gas in the tank for this company to carry on growing and the share price carrying going up. You can also see things like the return on capital employed, the return on equity, and these are the things that they measure how efficiently the company uses cash that's invested inside it. So if a company's got growing or increasing returns in this respect, they're getting more efficient at using the cash that we give them as investors to actually generate more cash for us down the line. So that then is like a circular argument to say, well, earnings per share should go up even faster. And that's what we're buying when we look at these things. We're buying earnings in the future so that we know the stock is more valuable now than it was back when we bought it. So the reason we aim at quality stocks in the playbook is really because why wouldn't you? If you look at some stocks, and we talked about the quantum computing stocks last week in an article that I did on Thursday, there's no value necessarily in there. There's great ideas and there's great potential, but there's nothing solid within there that we can then say, okay, here's an asset that we've actually bought into. And it's something that very much people like Warren Buffett and Graham and all of the great investors out there do. And we're just sort of copying sort of their ideas in that respect. So it's a really high quality company. On the valuation side of things.
If I may, you guys always say that investing should be boring.
Yes, and it is as boring as it gets, because actually we bought it on the 25th of September.
Actually, the 19th, actually.
Oh, the 19th?
Which is even better.
Okay,
yeah, I just checked.
Yeah, and we bought it in the middle of September, if people are being picky. And we check it once a day to see that it's going in the right direction. That's it. It's really boring apart from that. There's no excitement in this necessarily, apart from you look at it, and we bought it down here on the just after the 18th, and it shot all the way up there. That's the exciting bit when you look back on it. And what you can see here is the valuation chart that we use to say, okay, back here, was Indra undervalued or overvalued? Because we want to buy cheap stocks. We want to know their quality, but we also want to know that they're actually cheap here. So down here, we could see that actually its stock was turning around and it was ripe to go up, because these points up here showed us that there was far more a chance for appreciation of the stock price there. And
a quick question that has come in on FOMO at MyStockScanner.com is the question about exiting. If you go one screen back, because Liam, I want to hold you to where it's at right now, because a lot of people ask, isn't it time to get out? Now it's touching the upper bar. It's getting expensive.
No, it is getting expensive, and that's absolutely right, but it can get a hell of a lot more expensive. You look at companies like Tesla, you look at companies like Palantir over the last year or so, they're still up at nosebleed levels in the valuation. And to be honest, this is where the 0.3 comes in. If we go just to the trading view chart here, what we look for is to see that the stock is in a trend, and we don't buy it until it's not in that. We don't sell it, until it's not in that trend anymore. So for us, we would wait until the stock drops down. Normally we say the 50-day is the one that we watch, and if it breaches that and then stays underneath it for a day or two, then we sell. It might be that the MTIs turn red, in which case that will give us an indication, but we'd still wait for it to drop below a moving average. Sometimes we use the 10-day, sometimes, or the 20-day here in the red. Sometimes we use the 200-day. It just depends how much of a rocket ship it's been to go up, like Indra has at the moment. It's way above its 50-day. So we would probably start looking here for warning signs if it drops.
If I might add, all the details here are described in that free course that I made that is on the website, so people can go in there and watch.
Yeah, and I would just add one. I've just had one more thing. We sold Exelixis last week, and it's done exactly what I was just talking about. It dropped below its 200-day and the 50-day and stayed down there. So it went.
Yeah. And that's part of the being a member of MyStockScanner.com is that you get to look under the hood and you get to look into the portfolio and see the entire portfolio. You get notifications when we are selling and when we are buying. And there was 3 sells last week and 2 buys. And we're not going to go into details with that because we have news from Denmark that we need to talk about. Hans-Henrik, you're up here because I saw a piece of news today that Jefferies, one of those that comes with estimates of how much a stock should be valued, and they took a look at Novo Nordisk. I best bet we all have Novo Nordisk. We have to have with the amount of owners there are in Denmark, and if somebody got their coffee in the wrong way this morning, it was definitely due to this news because they said fair price 290, and that's way below where it's at right now.
Yeah, I should say I just pulled Novo Nordisk up here on what is called a daily chart, where each of these are a daily candle, so to say. And this is what we drew in last week. This is what is called a head and shoulder formation. And what we said there, and we were chatting with some of our members saying, if this line is broken, that is what is called a neckline on the shoulders and head. There's no magic in it, but if that was broken, we would be a bit worried. And we actually drew in this and said 280, 290 could be the next area this could go down to. Right now, on these news that Jefferies and a couple of others are lowering the target, it has broken down. That is a bit worrying. We are out of it. We bought it here, sold it here quickly, and we are out of it now.
And we are definitely not looking to go in it at the way that the tune is today, 1.6% down almost on the day. As you can all sense, it is a super busy week we're looking at. We have the 3-point show on Mondays. That's what happens there. On Wednesday, we have the Wednesday watch list. That's when we broadcast next. And the Wednesday watch list is basically the result of the Tuesday poll that we're going to put out tomorrow. We're going to put out Norwegian stocks for you to choose from. Which ones do you want to hear more about? We'll have that in the poll in all our groups on social media. If you look back to Friday behind us, and the reason why I'm pointing back is because on Friday we have our face-off. It was between Pepsi and Coke. That article is to be found both on our platform and then, of course, on our various sites on social media. I mentioned at the beginning of the show, 255 million people. That's the approximate customers that Walmart have in a week that visit a Walmart store in somewhere in the world, because they're worldwide. They got about 10,797 stores. Might be 1 or 2.
You can deduct 10 million from that now that the snap disappears.
Yeah, exactly. That's gonna be that's not gonna be funny at all.
No.
Apart from that, Walmart employs about 2.1 million people worldwide, so they're a huge company. And talking about huge companies, we have them all this week because earnings are coming out from Visa, United Health, HSBC, Iberdrola, Southern Copper. That's just tomorrow, and the rest of the week, just all the huge ones are going to be coming up with numbers. And we're going to keep monitoring them all, and we might even do an extra show just because there's so many numbers coming out, just to service you and make sure that you get to hear the news first and foremost. Questions, if you have them, FOMO at MyStockScanner.com. Again, you guys, I know that you're ready. I know it's weird to be excited because there will be earnings that does not live up to the expectation. And that's basically what these companies have to do. Hans-Henrik, Liam, do you have a fear for some of these companies that they're not going to do as well as the expectations are hoping?
Yeah. Well, to be honest, for this Q3 earnings, I'm not too worried about. It seems like there's good momentum. Depends on if investments can keep going into AI. And then in Q1, Q2, the earnings there, I am starting to getting a bit worried about the overall picture on a lot of US companies, but that has more to do with tariffs. We know they are normally 9 to 12 months delayed into the earnings, so that could start to hurt there. Right now, I'm not that worried.
Liam, have a company that you're worried about that you are going to take an extra long look at when they put out the numbers?
I would say Meta. They haven't got the hyperscalers are the companies like Google and Microsoft. They're the ones going well because they've got the data centers. Meta haven't. They spent a amount on getting talent in there. Haven't got any real AI presence apart from it gets their advertising better.
We will keep you posted all the way through the week. If you have any questions, you know the email address. We're wrapping up MyStockScanner Live for today. And remember, every investment gets easier when you focus on three things. It's quality, it's upside, and it's timing. Until next time, happy investing all, and I'll see you guys on Wednesday. Have a good one.